Great. All right. So this is our first episode ever of COVID Convos. Thanks for joining us. My name is Cyril Wong. I'm the CEO, digital strategist of Butlers Incorporated. We started COVID Convos in order to talk about how businesses are adjusting to the COVID-19 crisis and quarantine. Specifically, we're dealing with businesses and how they're adjusting to home office life, how they've changed their business strategy, and also how people are being proactive today. Today, my guest is Tracey Morrison from Mortgage Group Inc. Is that correct?
Yeah.
And Tracey is a mortgage specialist. Prior to working with Mortgage Group Inc., she worked with two different mortgage lenders. When she isn't busy working, you can find her spending time with her two boys or watching a Yankees baseball game. Tracey works with numerous lenders, including banks. She loves being able to assist clients, whether it's helping them with the purchase of their first home, consolidating high interest debt, or obtaining a better rate for their upcoming renewal. As her tagline goes, she always has your best interest at heart. Welcome, Tracey.
Thank you, Cyril. Happy to be here.
Thanks for joining us. So we're just going to dive right into it. And I wanted to ask you, how is COVID-19 affecting your business?
Well, obviously, we've had an influx of not only questions, but people just looking to, inquire, obviously, as to how to defer mortgage payments or, just concerned about what the future holds for them. So other people are seeing some great deals on house purchases, so lots of questions on that. And then others just looking to cut their spending or reduce, high interest credit card debt. So looking at a lot of refinances as well.
Oh, very cool. So let's talk about deferring mortgage payments. What can people do about that today?
Yeah, so I think it's gotten a bit better. Obviously, initially there was a lot of questions and concerns and panicked clients. So the phone lines and everything to get into your lender was hours and hours of wait. I did have clients tell me they've been trying for days. So I think it's gotten a little bit better, and a lot of lenders quickly jumped into action and put assistance on their website where you could apply right online to defer your payments. Mm-hmm. So that is done on a case-by-case basis. They want to look at your situation. So provided you're not currently in arrears, lenders will look at deferring your payment for up to 6 months. And I have had clients, so far I've heard no complaints. Most of them have been able to get it deferred quickly and easily, once they get through to the lender.
And we just want to make sure that our audience knows that this is a deferral, not a forgiveness, correct?
Correct. So yeah, when the situation gets back to whatever normal is, those payments and interest are going to be due. So it does vary per lender. So far, what I've encountered with most lenders is that they're deferring for up to the 6 months. So again, not forgiving, but just putting those payments on pause. Once those payments start again, those payments and interest are due. So depending again on the lender, most are, your payment will go up basically. Your payment's going to increase to, catch you up from those payments that you've missed.
So the idea, it sounds like, is that to defer the payment allows us to kind of mitigate just the short term in order to allow for when the economy actually does restart, that we have like a catch-up period. But like there's no, there's less, or we're trying to mitigate some of that impact immediately, correct?
Correct, yeah. So, I mean, if you can make your payment, every situation is going to be different, and that's why the lenders want to look specifically at your situation before they determine if you can defer or not. But if you can make your payments, you should make your payments.
Yeah, definitely. And so right now, you're saying it's a really great time to look into getting a debt consolidation mortgage or a mortgage in general. I hear that the rates are very low right now.
Yeah, so it is a great time, whether your mortgage is coming up for renewal, or you notice now, right, everyone's not spending as much, and they're able to kind of look at at what their payments are, right?
Yeah.
So because rates are so low, it is a good time if you've got high interest credit card debt where they're sitting at, 18,
North
20,
of 20, right?
that you can get rates under 3%,
Oh,
right? So,
wow.
yeah, it's
Wow. Could you imagine that? Like taking your balloon 20% interest rates and just dropping them to 3? Oh my goodness. And it's permanent, right?
yeah, makes a big difference in your payments. So yeah, interest rates vary, depending on situation again. So
Mhm.
and what you're doing, purchases versus refinance, credit scores, it does vary.
For sure.
Yeah, you're looking at variable rates around 2.2 and fixed around 2.39.
That's amazing. That's really amazing. So we kind of touched on this, but consolidating debt, this is something that you help a lot of customers with.
Yeah, that's been a big part of my business. Again, just because of rates, they've been kind of going fluctuating a little bit, right, up or down, but
Mhm.
they have been dropping recently. So it's a good time, especially on renewal. It makes sense too, right? I have a lot of clients that their mortgage is coming up for renewal, and now they're looking at, okay, can you throw in this trailer loan or this credit card that I never seem to be able to get rid of, and roll it in on renewal. So
Mm.
um, yeah, can save you a lot of money.
That's amazing. I'm sure lots of people are interested in saving money, especially right now.
Absolutely.
On the other side of it, I hear that's a really great time for investors, people that do have like a cache of money that they're sitting on. Can you kind of elaborate on that situation for us?
Yeah. So whether you're looking to purchase, maybe a second home, a rental property, or a place for your kids to live in while they go to university. Um, very, very great time because there's some deals. Obviously, it's a buyer's market right now,
Hmm.
and with rates sitting so low, if you've got, your income is secure, your job,
Yeah.
and you've got the funds, it's a fantastic time.
Awesome. Very cool. So like the key takeaways for our customers, just to highlight, defer your mortgage payments if you can. Like if you need it right now, really great idea to do that right now. There are the best mortgage rates available today on the market, like as low as 2.2. And what was it for fixed rates that we're looking at? Like 3 point something.
2.39.
That's amazing. And
Mhm.
then, if you, this is a great way to consolidate debt. And also in terms of investors, like this is a buyer's market, as you were saying. And, lending rates are the lowest you've ever seen. So take advantage of that. Lastly, what does it cost for your service?
So typically no cost. I'm paid by the institution when your mortgage funds. So I deal with numerous lenders, banks, trust companies, private lenders, so many options. So yeah, so typically there is no cost. The only costs you would have would be your legal costs. But if it's on renewal, you don't even have lawyer costs. That's free. So
Perfect. So like just get in touch with you and like you can help out anybody that is looking to just find information and figure out what's next, right?
yeah, I'm always available. Phone, email.
Oh, and so what is your superpower? Like as a mortgage specialist coming to you, why should people call you instead of just going back to the bank today?
Well, often we're able to get a better rate, just because when your bank has high overhead, right? Your bank has offices on every corner and staff they're paying. Most of the institutions I deal with, we're their form of advertising, right?
Right.
So they're not paying that overhead for us to advertise on their behalf. So often, and this did just happen, I had a client who had gone to their own bank and had come to me, and my rate was better with the same institution.
Wow.
Um, yeah. Again, it's just
That's incredible. Like what gives you that kind of negotiating power?
yeah, just the relationship we have with our lenders. So as you mentioned earlier, I've been doing this 20 years.
Mm,
So we've been dealing with these institutions for some of them 20 years, right?
yeah.
Have you established that relationship business wise and personal as well? And yeah, they're able to offer those rates just because of free advertising, really, to the
It's always good to have a friend in money, right?
yeah, absolutely.
Is there a maximum size that people can can go after, or like based on your experience, are there like is there a deal like a mortgage too small that you're not interested in, or like are there deals that are too big that like you'd have to pass on that business?
No, so we can do wide range, obviously residential and commercial. There's no, some institutions have a minimum. So, depending as your mortgage gets smaller, some institutions don't want to take that on just because of the cost to maintain a mortgage. But there are others that look at it without issue. So it may narrow where, which institutions we can go to when the mortgage gets small. As for the higher end, no, again, it depends on how much down payment or equity you have. But CMHC's max is $1 million. So if you're looking to put less than 20% down, that changes your limits. But in terms of me, no. So there's really no minimum or maximum.
Great. So for us, for some of our listeners that have a bit more brand bias, it sounds like you have products like all across the spectrum because you're not representing one singular institution, but rather many institutions. And so you can shop around and do comparative buying to get people the very best rate.
Correct. So again, I want to point out it's not always about rate because there are institutions that offer what we call like a no frills type mortgage. So I always say I can find the best product for you. So depending what you're looking for or what you qualify for, I will get you that product. But sometimes people just see rate. Oh, it's all about rate, right?
Yeah.
Whereas it really isn't. And sometimes you're not aware of, it's important to be aware of what you're signing. So for instance, some of these no frills maybe have higher penalties. So if you do decide to sell and upgrade or downsize or whatever, you can be hit with a really large penalty, some of which we've seen in the news. Other times, maybe you can't get out of it, right? So let's say you decide you bought a house with, say, your husband or wife, or even a partner, a business partner, and you go to get out of that mortgage because now you want to get your own place, or you've divorced or whatever. Sometimes you can't get out of that. So only unless you're selling. So you want to be aware of the product.
So it sounds like you can really help people to strategize a really winning game plan based on people's adversity to risk or to mitigate risk, and to help to navigate this landscape for like in terms of law as well as your options available to you.
Yeah, absolutely. That's what I'm here for, and I love helping my clients and making sure they're in a product that works for them. Correct.
Yeah, perfect. Thank you, Tracey. Lastly, how do people get a hold of you?
Yeah, you can email me. You can go to my website. You can call me. I'm very, very flexible and available, and they can always call. I'm here to answer any of your questions.
Perfect. We'll link that information in the description below. And yeah, so thank you so much for joining us on COVID Combos. I really appreciate you being our first guest and being my guinea pig.
Yeah, no, thank you so much, Cyril. Good to be here.
Great. And so for our listeners, we will be doing this every Wednesday to try to introduce you more to people that are in our area that are working hard during COVID-19 and trying to get you the very best information so that we're all winners when this is all done. Thank you again for joining us, and we'll see you again. Thank
Thanks.
you.